Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.
China tightens its ban on cryptocurrency after reports that it was failing to stop crypto activity in the country. The SEC issues a new set of ETF denials, this time denying 9 ETF proposals. Days later, the SEC, in a surprise move, recalled the denials for an internal review. Bitman discloses its Bitcoin cash holdings ahead of its IPO. Vitalik Buterin lambastes Dr. Craig Wright's proposal to fork Bitcoin Cash. Good evening, I'm Crypto Man Ran, and this week's episode of Crypto Trader starts right now. In a surprise move, the Chinese government tightened its ban on cryptocurrencies this week after reports that it had failed to curb cryptocurrency trading. This after last year in September, the Chinese government banned cryptocurrency trading. In the latest move though, the ban has become much more strict, with the Chinese government threatening to block over 120 IP addresses that belong to exchanges. Not only that, they're also blocking any WeChat-related accounts that deal with cryptocurrencies and banning any crypto-related meetups or conferences. Our sources in China tell us that this move shows how desperate the government is to ban cryptocurrencies and just how little control they have over the industry. Later this year, Crypto Trader will be going into China and bringing you a full coverage of the underground crypto scene in China. In other big news, the SEC once again denied a series of Bitcoin ETFs. This time they denied 9 ETFs. Now, if you remember the last denial that the SEC did, they denied the Winklevoss ETF because they said there was too much manipulation in the underlying market, which was in this case the Bitcoin market. This time though, the ETFs were based on the futures market and not the underlying market. And the SEC ruled that the futures market was, quote, too small and insignificant, and the majority of the trading on Bitcoin takes place in the underlying market. Then, in an unprecedented move, the SEC recalled the denials and put a stay on them, effectively putting them under review by the Commissioner. Commissioner Hester Peirce said yesterday that the SEC had the right to recall a decision made by their staff for review by the Commissioners. It seems that the SEC is really adopting a strange and overly cautious approach when it comes to regulating the Bitcoin ETF, and that this approach is causing a lot of infighting inside the ETF. The news of the ETF rejections was expected by most traders and only caused the market to drop by 3%. And though this move was largely insignificant, it does confirm that we're still firmly in the bear market. Joining me tonight, I have a panel of crypto OGs, all who have been part of more than one bear market, to talk about the bear market and the denial of the ETF. I have the Bitcoin Oracle, Vinny Lingham, joining me from San Francisco. I've got the founder of Shapeshift, Erik Voorhees, joining me from the United States. I've got Simon Dixon, CEO of Bank to the Future, Anthony Pompliano, all the way from the West Coast, and Tone Vace, the man who called Bitcoin to $1,300, joining me all the way from his suite in Las Vegas. Gentlemen, or shall I say OGs, good evening. Thank you for joining us on Crypto Trader. Simon, since you haven't been with us before, I'm going to give you the honors of going first. I asked Twitter who we should get on the show, and they were quite unanimous asking us to get Simon Dixon on the show. Who is Simon Dixon?
Well, I run banktothefuture.com. I spoke at the very first Bitcoin conference in the world and wrote the first published book that included Bitcoin, and have invested in about 100 different companies in the industry.
How much money have you invested in the space?
Well, through Bank to the Future, we've invested $600 million in funding rounds listed on the platform, all in crypto companies.
Simon, this is not the first bear market we've ever seen, but is this the worst bear market you've ever seen?
I don't think so. It is. We have seen bear markets like this. I've personally seen my $30 Bitcoin crash to $3, my $1,250 Bitcoin crash to $250, and now my $20,000 Bitcoin's crashed to $5,000. It does appear that we are in a very similar market to the 2014 post Mt. Gox market, where all news was bad. A lot of time was spent on building. But we're definitely in, we've had an extended 7-month period, and it looks very similar to the last time we were here around about 2014.
Simon, the difference between the 2014 bear market and the 2018 bear market is that in 2014, the market was very small. It was made up of a bunch of technical people. In 2018, we roped in a whole lot of retail investors, and the ecosystem is much bigger. Do you think that we can get the retail investors back into crypto?
I think the retail investor always comes in cycles. It's about understanding the economics of Bitcoin. The economics of Bitcoin state that every 4 years, the number of Bitcoins created every 10 minutes halves, which means that in 2020, we have the halving, and we normally have the year before the halving, you start to see the run up where retail investors come along, and I'm sure we'll have institutional investors that miss the boat joining the race as well.
So Simon, can we expect more blood on the streets, or is the worst over?
I would think so. I think you just got to, take a little symmetrical chart of where we were last time. It took us about a year and a half until the positive news and the building actually started coming through. I think we're now 7 months into that, so we're just over halfway. I'd expect a flattening. I'm not sure exactly where the bottom is. I would have liked to have seen a really big crash, and then, the buying pressure come back in. But at the moment, I think we're just going to have a flat market. It's gradually getting lower until we reach the point where the day, it's the day while everyone's still saying that Bitcoin's a scam, Bitcoin's a Ponzi scheme and a currency for drug dealers, that's where it always creates an undervalued opportunity. And we're still in that phase right now. So it's once those phrases when you stop hearing those phrases, that's when you tend to see a turnaround for Bitcoin.
Next up, I'm looking at the Bitcoin oracle, Vinny Lingham. Vinny, the last time we spoke, you said something, and at the time I thought you were being overly bearish. You warned us that this bear market was going to go on and on and on. I remember I asked you what happens next, and you said it goes down and down for a long period of time with a whole lot of spikes along the way. Well, Vinny, has it been a long period of time? Is this the end of the bear market?
So, Ran, I think on balance, it may be the start of the bottoming out phase, right, of the bear market. The problem with this is it doesn't mean that the bottom is the way we see today in terms of price. It could be 50% down. It could be 20% down. It could be the bottom, right? 6,000 could be the bottom. I think it's probably a 50-50 chance that it's not the bottom and that we go down further and we have to test new lows, just because of the pure fundamentals around how crypto works and how Bitcoin and ETH are really the fiat gateways for a massive crypto economy. And so this is a huge thesis which I've had, and our fund, Multicoin Capital, we've played this out as well. We really don't think that the bottom is there yet. But if the market turns around, there's some catalyst for growth, maybe.
Vinny, could the market be going down because ICOs raised money in Bitcoin and ETH and they're now panic selling into the market?
So essentially what I'm saying is, if you look at how much money was raised through ETH and through Bitcoin, the headline numbers when ETH was at $1,400 isn't correct, right? So if you said at $1,400, we've just raised $1 billion this month, well, at $250 or $300, that's been chopped significantly. So the runways of these companies, because even though from a journalistic perspective, it makes great headlines to throw out big numbers, they didn't raise US dollars. And so for in crypto, for every dollar that someone's putting into crypto, there's a seller on the other side. And so every dollar that's needed by someone who's running a crypto company in order to pay salaries, to pay travel, to pay operation expenses, there needs to be a counterparty, a dollar buyer on the other end. And what happens is, if you do the mathematics behind this, it appears to be that there is somewhere in the region of $1 billion a month worth of crypto sales into fiat that needs fiat to get out of the system. So in other words, crypto companies, the crypto economy needs $1 billion a month just to keep going and to pay salaries, infrastructure, etc., to support the lives and operations of 50 to 100,000 people across 45,000 companies. And this is a real big concern. And to give you an example, in the previous bear market, the biggest source of price coming down really and pricing pressure was, first of all, crypto sales. Second of all, miners. Right now, miners need to sell, just in Bitcoin alone, somewhere in the region of $200 million worth of Bitcoin a month, just to basically cover their costs. So you take the mining costs and then you add the salaries and operations. Salaries and operations are 4 times what mining costs are in this current bear run.
So that means that just to stay where we are and to prevent a net outflow, we need to bring in $1.2 billion worth of new capital every single month. That sounds crazy.
That's absolutely correct. And this is why I'm bearish on the market currently, because unless institutional and retail demand can bring in over $1 billion a month worth of fiat into the crypto ecosystem, what happens is companies and projects have to sell more crypto in order to get the same amount of fiat out of the system. So now you have massive supply coming into the market. And so what happens with the crypto tokens is the reason the prices are going down is because the gateway isn't the tokens. The tokens don't have enough fiat pairs. So they have to go and swap tokens into into BTC or ETH and then into USD to get money out of the system.
So that's Vinny Lingham, and on Twitter, some people call him the ultimate counter indicator. Next up, Erik Voorhees. You're the CEO of Shapeshift, and you guys make your money out of the volume of transactions that's traded. Erik, the last time we spoke, you also warned us of an extended bear market and that we should brace ourselves for a long time. Has it been a long time? Can we expect the bear market to end soon?
I don't expect it to end soon, although I think the rate of collapse has slowed considerably. You know, generally in these bubbles, after you go through several months of downtrend, you kind of hang out in a range for a while, and that while can be a couple months, or, you know, after the bubble in 2013, it can be a couple years. But I think we're done with the majority of the collapse.
Erik, when you say that we are done with the majority of the collapse, are we now in what you would call buying territory?
Yeah, I think so. I mean, I'd be surprised if Bitcoin falls more than 30% from here, which might still sound like a lot to some people. But yeah, I think, you know, anything in the $5,000 to $8,000 range for Bitcoin is pretty reasonable, and in a couple of years will look like a great spot. It's, you know, 70% down off its peak, which ain't bad.
Now, Erik, there are a whole lot of Bitcoin maximalists on Twitter and even right here on the show that claim that this may be the end of the utility token, that all altcoins will die and that only one chain will survive, and that will be the Bitcoin chain. Are you one of those maximalists?
No, not at all. I mean, Bitcoin, the first bubble of Bitcoin I was in, it fell from $31 to $2. So that's like a 98% decline. Now, a lot of the tokens are pretty much worthless anyway. So some of them should just keep going to zero. Most of them are crap. But that, you know, this process of finding, you know, the gold within the chaos is an important one.
So you mentioned that you were a Bitcoin maximalist, but you're not anymore. What is the change of heart?
The change in heart, I think, largely came because I realized that digital assets could fill many different use cases, and cryptocurrency was sort of one early one that was successful, but was not at all the only one. And so you're going to get lots of blockchains and lots of different digital assets for all different kinds of use cases. These different blockchains and assets have trade-offs in their features, which means that some of them are good for certain purposes and not for others. And this idea that Bitcoin, with its specific properties, is going to be optimal for every single use case is really naive, and I think cuts against the very decentralization that we were all trying to build in the first place.
But Erik, you have Bitcoin maximalists walking around with huge smiles on their faces as if they've been vindicated and that the demise of altcoins is just a few days away. Have they just drunk the Kool-Aid?
Well, I'm pretty drunk on the Bitcoin Kool-Aid myself, but I see Bitcoin as one of many assets that is changing how all of finance is going to work.
Next up, I've got the man who wants to tokenize the whole world, but is not a believer in utility tokens, Anthony Pompliano. Anthony, I know you're not a fan of utility tokens, but do you think that this bear market may be coming to an end?
No, look, I think if you look across, kind of the historical context here, right, with these parabolic runs, we've seen the drawdown, right, 70% or so. We've seen a couple in the past that have been worse, right, into the 80, 85%. But I think what ends up happening is when you get a long drawdown like we've just seen, we'll hit a bottom at some point, and then we'll kind of go sideways for a while. And so, the last one was over 400 days. I think this one's likely to be, quite long. And so we're, very interested to see kind of how this plays out. But I think that's the general direction of where we think this is going to go.
So do you think we're near the bottom, or is there still much more pain to come? And if so, where is the bottom?
Yeah, unfortunately, I think that we're still going towards the bottom. I think that it's hard to tell where the bottom is going to be. A lot of the people that I've talked with and seen models and kind of the data that we've done internally, it feels like anywhere between $3,000 to $4,000 could be a bottom. Obviously, for a whole host of reasons, we'd like to see it not be that low. But if it goes down there, I think that we're prepared, to kind of continue to invest capital in that type of environment.
Now, Ant, the question that I asked all the other guys, it's a question which baffles me. Last year, this time, we had all the bad news. China banning crypto, South Korea banning crypto, Bitcoin scaling issues, Ethereum scaling issues, and we went into the biggest bull market of all time. This year, all that is behind us, and now we're in a bear market. How do you explain that?
Yeah, so I think two things. So one is across a number of different industries, we know that when government bans things, sales usually spike, right? People like to get things, or people don't like to be told that they can't do something or they can't buy something. And so I think that's, that plays out across industry. Second of all, is I think what we saw was a huge influx of capital, and a lot of those teams are well capitalized today. They're beginning to lay the groundwork or the infrastructure for kind of the next 5-10 years. And so as you look at the capital inflows, I think that that's a positive sign for the future. But the second thing is around these network effects. And so if you think of how do you value a network, well, the more people that join a network, the more valuable it becomes. And so when price spikes, you get a huge influx of people. When price draws down, you actually see people either stagnate from growth or leave the network. And so what I think ends up having to happen is we're going to have to hit some sort of inflection point again, or some bottom that then kind of reverses. And then as we see more people join that network, you'll see price continue to drive there. And so that network effect, I think, is really important, but often gets overlooked.
Now, speaking of the network effect, it's not only Bitcoin that has a network effect. All the other coins, the altcoins, they also have a network effect. But I've seen on Twitter that you're not very friendly to altcoins and utility tokens. Do you believe that this may be the end of the utility token?
Yeah, so I don't think that you could say it's the end, right? I think that, again, the promise of the technology around this utility token got people really excited. A bunch of capital rushed in. A bunch of people, came into those networks, and they got very kind of drunk with the dream. And so I think what we're seeing now is reality sets in. And again, as we've said all along, the utility tokens, one, are not a great investment for investors. It's not equity. It's not debt. It's not a claim on cash flow. And then two is you still have to build a product. You still have to build the network where you can use those utility tokens. And so there's a couple of teams who have actually gotten to a live product, but many of them have not yet. And so it remains to be seen whether somebody can actually build a product that people want, regardless of whether it's built on blockchain or not. And so until we get to that point, I think that the utility tokens are still kind of in this gray area of, in the long term, maybe, in the short term, unlikely.
Tone Vase, from your suite in Las Vegas, I've purposely kept you for last. Tone, the last time we spoke, you were a big Bitcoin bear. In fact, you said that Bitcoin was going to go down to 3,000 US dollars. At the time, I thought you must be high on drugs, but today I actually think I want some of those drugs. Do you still think we're headed towards 3,000 US dollars?
Yeah, so $3,000 was like my middle point. Around mid to late January, I basically became a proponent of this bear market, and my most optimistic target was $5,000. My most pessimistic target was $1,300. My most optimistic time end to the bear market was late October, early November. My most pessimistic time period, end of the bear market, was going to be like August of next year. So I'm actually still waiting for my 4,975 or 5,000 to round off number. It keeps trying to get there, but then it keeps bouncing back because shorts get over leveraged and they get squeezed. So I'm still looking for that $5,000 number. We are probably going lower, but I'm trying not to make too many lower targets until we hit my 5,000. So that's my current target, but we're probably going to go lower than 5,000 as well.
Tone, the big question that I've asked everyone else. Last year, this time, we had all the FUD. China ban, South Korea ban, no scaling, etc., etc. This year, that's all behind us. The FUD is gone, and now we're in a bear market. How do you make sense of that?
Because like 80 to 90% of the valuation of Bitcoin is still speculators. And when speculators get scared because prices are going down, they overshoot to the downside. Just like we overshot to the upside, last year, I was pretty adamant that I expected 7,500 in November to be the ultimate high for the year. Now, clearly, you can say I was wrong by a lot because we went all the way to 20K. But in reality, I was only off by 3 weeks. It's just that in those 3 weeks, the price went up a lot. Now, I was a bear when Bitcoin hit 7,500, reversed, and I was looking for my 5,000 number to get hit then and probably lower going into year end. It was hard for me to time the bottom because we reversed at 5,400, didn't quite make it to my 55. But once we got back to that 75 area, I once again became a bull with absolutely no idea where we were going to top. But what I knew at that time was that we were going to come back to 5,000. It didn't matter to me. In late November, early December, when we were flying up above 7,500, the market could have gone to 100K going into January, and I still would have said we're going back to 5K. The market needs to retest prior significant highs. The 5,000 was never retested, and even the 1,300, the $1,200, $1,300 area from 2013 was never retested, and that $1,300 area continues to worry me to this day.
A few months ago, I went onto CNBC Fast Money and I called a hard sell on the XRP token. At the time, I believed that the token had no scarcity and no real utility.
And Ripple, hodl or fodl?
Ripple, I'm throwing in the garbage.
In the garbage? You can't even say fodl. You're saying in the garbage. We need a new animation.
Fodl.
Why in the garbage?
Because I've been researching the Ripple token, the XRP token, for a long time. Let me just make a differentiation. Ripple, the company, one of the best companies I know. XRP, the token, I still can't work out what it's used for.
Okay, wait. So, because a lot of people say you can't have the platform without the coin, and the coin is a statement as to how good the technology is. But you're saying that there's actually a difference.
So Ripple, the company, does the banking systems. It replaces SWIFT with bank-to-bank money transfers, primarily international money transfers. You don't need the XRP token to do that. So as far as I know, I can't find a use case for the token. So I'm out. My call caused chaos on Twitter, and I made a commitment to the crypto community that I'd do more research to find out what the use case of the XRP token is. So I flew 33 hours to the Ripple office in San Francisco and met the head of product, Ashish Birla. Ashish, we met earlier this year at the Ripple offices in San Francisco, and we had a great discussion about Ripple and the XRP token. Let's fill our viewers in on that discussion and settle the debate once and for all, and clarify the controversy around the XRP token and the Ripple company. So Ashish, let's start off with the question around the relationship between Ripple and the XRP token. What is the relationship?
Yeah, so Ripple, I'm an employee of Ripple. I've been at Ripple for 5 years. It's a for-profit company. We build enterprise software grade products for financial institutions around the world. XRP is a digital asset. Ripple Inc. holds a good amount of the digital asset, but they are different, sets of things. One is a company and we sell software products, and the other is, XRP, the digital asset, is an open distributed ledger system that anyone can use, and it's decentralized. And Ripple Inc. is one of the developers on the XRP ledger. But as we talked about when you came into Ripple, there are other folks that we're really excited about that are building big businesses on top of the XRP ledger. Coil, for example, and we launched Spring, which is a venture to foster the XRP ecosystem. And so we're really excited about all the activity around the XRP ledger.
Now, are any of the founders of the XRP ledger connected or associated with Ripple in any way?
So David Schwartz is our CTO, newly announced CTO. He's just been a very, very good person to work with for me. He's been my mentor at Ripple. Knows so much about decentralization and distributed systems, but he also is fundamental in architecting not only Ripple products but also the original XRP ledger.
Now, some of the criticism around XRP is that the ledger may be centralized, and that as a result of this, XRP may in fact be deemed a security. How many validators are there, and how many are controlled directly or indirectly by the Ripple company?
Yeah, so again, like the difference, Ripple Inc., the for-profit institution, we make software that we sell to financial institutions. And I think some of the FUD that you're talking about is around the XRP ledger. And, it's decentralized. We have a whole plan about further decentralizing the XRP ledger. We aren't a mining system like Bitcoin. We have validators that different people around the world are running that validate transactions on the ledger. And if it went away, the XRP ledger would still flourish. It would still continue on. It would still be open for folks to develop and build big businesses on.
Are there any other groups that hold multiple validator nodes?
Yeah, so Ripple Inc. does run some validators. We have a blog, architecting our plan towards further decentralizing that. I believe that there's about 10 of the validators that I think there's 100 some out there now, but 10 are run by Ripple Inc.
Okay, Ashish, let's move the conversation to the use case of the XRP token. And I think to do that, we need to talk about the products that Ripple is building for the banking system and how the token relates to those products. Tell us about those products and how the token is used.
Yeah, so, again, Ripple is like one company building on top of the XRP ledger. There's other ones that have different use cases. But the one use case that we really felt passionate about, and again, we've been around for, a long time, since 2012, we realized that payments, and specifically cross-border payments, had the most friction, out there. And so what we started building was, a set of products. The first one that we introduced was Xcurrent, that connected financial institutions around the world and helped them communicate, helped them send compliant information so they can comply with local regulations. And that product is doing really well in the market now. We're selling over 2 of those products per week. And so that is the first product.
We're all out of time for this week's edition of Crypto Trader. It's been a jam-packed show. Next week, I'll be coming to you from the tech hub that is Tel Aviv. Until then, I'll be on Twitter at CryptoManRun, and you should trade well, my friends.
Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.